Hello, this is the tradesight stocks and futures market preview and U.S. economic data roadmap for the week beginning Monday, July 29th, 2013, ending Friday, August 2nd, 2013. Charts as usual brought to you by the excellent eSignal 11 platform. Here's a look at the S&P daily chart on the right side of your screen, and you can see what's happened here. We've got this long trend line that we were following, and then it broke, and then we came all the way up here. We've now retested it. Look how we're running right underneath it. Isn't that amazing? So you've actually been heading up, even though you're not getting back above the uptrend line to confirm anything. Very sort of awkward in my mind. Also, let's take a look at the NASDAQ 100 index just to see it on the daily chart. Closing near highs after Friday, a little push up. We had a lot of earnings come out this week. We just finished up the core 8 days of earnings here in the U.S. Here's the stocks, which slipped a bit, including Friday, even though the NASDAQ rose. And here's the biotech index, which got a closing high for the year. That's pushing the market higher. So from a daily chart perspective, kind of got mixed signals. Not really anything to tell you with the S&P not getting back above that trend line, kind of drifting. NDX maybe about to close at new highs, but not very exciting. Biotech's probably the strongest area to watch. Here's a look at Apple. I mean, if you look at this Apple chart, what's amazing about this is not the fact that it's trading still near the 400 area, that it hasn't filled the gap at 370 that we've been watching, but that we're basically in a 60-point range for 6 months now in Apple. When did all the excitement come out of Apple? We're still making good money intraday on it, but it certainly has been a little less exciting than it has been in previous times. Here's the look at the Google chart, another one that had a little run and now is pausing. Watch that red static trend line there in Google around the 874 area. Here's Amazon, which surged to new highs on Friday. Here's a look at Netflix, which didn't do much this week. So that's all of the daily chart stuff from this week. Let's take a look at the intra-week futures action. This includes starting at the beginning of Monday, which was a flat opening. So we had fairly narrow session Monday, fairly narrow on Tuesday. Wednesday, we did see a drop in the action on Wednesday. Thursday, we had a gap down and then rallied a bit. Friday, a gap down, headed lower, and still closed the gap. Guess what? For the whole week, we had closed the prior Friday right here at 1690. Closed this week at 16, almost right at 1686, 87. So down 3 points on the S&P for the whole week, which isn't really a big deal. However, keep an eye on this chart, and then let me switch it here. It'll show you the NASDAQ 100. Completely different picture because of earnings. We've got a lot of different gaps and everything. NASDAQ 100 actually ended up gaining 30 points for the week. We can see here's the close last Friday. Little gap up and filled on Monday, then just junking around after that. Little gap up, filled in more on Tuesday, closed weak. Little gap up on Wednesday, never quite filled the gap, so keep that in mind. That's something to be aware of there at that 30.26 level on the NQ futures. Thursday, a fairly flat opening, played both ways and ended up about flat for the session. Friday, a little gap down, which we filled very quickly, and then a late day rally. You did not see that in the broad market, obviously. So, very different situation between the S&P and the NASDAQ side, which is not uncommon when you're in the middle of core earnings. Some of the tech stocks doing things different than the rest of the market's looking at. And that is behind us now. We do have a lot ahead of us, though, so let's focus on what's coming this next week, because there is certainly a lot of it. Here's a look at the data coming out this week. Monday, pending home sales. Who cares? Not a big deal. Tuesday, Case-Shiller 20-City Index. The consumer confidence number can move stocks a little bit. We'll be watching that. But that's the beginning of a 2-day Fed meeting, which then takes us into Wednesday, where we've got, keep track of this now, before the market, the first look at GDP for the second quarter. That is a big quarterly number. That can move the market. We've got Chicago PMI after that, crude oil inventories, and the FOMC rate announcement at 2 p.m. Eastern Time. Again, probably not going to do anything with rates, but they can say things that will move the market. It also means that probably Tuesday won't be that interesting, and Wednesday morning could be, just because the GDP number comes out first, and then we die off until the Fed number. Initial and continuing jobless claims, along with ISM index, construction spending, natty gas, and auto and truck sales on Thursday. And then Friday, we lead into a big number of the unemployment rate with non-farm payroll, along with our personal income and spending and factory orders. So it is a decent week for earnings. Most of it stacked Wednesday, Thursday, and Friday. If you're going to focus on something this week, obviously it's that GDP number. It's Wednesday in general. It's the GDP number and the Fed announcement. Those are going to be the things the market looks at. That's what we're going to be watching. We'll be watching that trend line on the S&P for sure. That's really important to see if that ever breaks back to the upside of that. That would be a real bullish indicator for the market. But even though we drift higher or sideways to higher, you can't get back above that line. I don't see anything positive right now in the market. We are kind of in the summer doldrums, but we've pushed the core 8 days of earnings behind us, so we can focus on the things that are ahead of us, perhaps. Whether volume starts to pick up now that the earnings are behind us or not, we kind of have that free. August is typically one of the best trading months of the year, to be honest, on the long side. Even though volume can be a little light, and we certainly have seen light volume this year anyway, August is typically one of the most upward months of the year for stocks. It's one of the easiest months of the year for trading. So we're definitely looking forward to August. And then September can start to get a little bit choppy, but volume tends to pick up after people come back from summer. So we'll call it as we see it in the lab and everywhere else. Have a great weekend.